Thank you for the introduction. So as he mentioned, I'm going to talk to you about Cornish Metals and our developments at the South Crofty tin mine that's located in Cornwall. What you see in the image there is the head frame at our new cook's kitchen shaft, right above a shaft that's 770 meters deep that we are currently refurbishing. So I'll get into some of the details of the activities and some background as well. So firstly, just a bit of a snapshot on Cornish Metals. We own 100% the South Crofty mine. We acquired this in 2016 out of administration. It's a mine that had been operating for about 400 years before it shut down in 1998, not because of a lack of resource, but because an extended period of depressed prices for tin. Back then, prices were hovering around that $4,000 or $5,000 per ton. Currently, just check the screens, about $53,000 a ton. So it's a very different landscape for tin, and I'll talk about the supply and demand fundamentals and what's changed over the last couple of decades. This is a mine that is permitted to construction. We have all the planning permissions to build the surface infrastructure, and we have an underground mine permit up until 2071. That's quite important. We also do have very strong support from the local communities, local council, as well as from the national government, which I'll talk to in a moment, looking at our register. In terms of the economics, I'll look at spot economics because we use a very conservative price in the study published last year. We're looking at an NPV of about $450 million at $50,000 tin price, an IRR of about 35%, and payback of about 2 years. So it has very strong economics, and that's on the basis of a resource that provides a 14-year mine life. But this is a mine that's been operating for about 400 years. We know there's a lot more underneath there. There's a lot of potential to extend this to be a multi-generational mine, as it was once before when we do reopen it. Tin, we're surrounded by tin in this room in the form of pewter, which contains about 98% tin. Thanks, Jeremy, for reminding me about that. It is a critical mineral in the UK, US, Canada. We'll talk about the supply-demand fundamental, and mostly on the supply side, the concentration of tin production worldwide. Now, just looking at the corporate information, you can see on the top of the bottom section here on the left are major strategic shareholders. We have Vision Blue Resources with 29% shareholding. They stepped onto the register in 2023, having anchored a £40 million raise, putting in $25 million. And that was really important. While we acquired the asset in 2016, not much really advanced in that period. It was very, very difficult to raise the funding, especially in the mid-teens. We IPO'd the company on AIM in 2021, and then got the investment from Vision Blue in 23. This really allowed us to advance activity on site, building a water treatment plant to start pumping out the water from the mine. The mine having been shut in 1998, underground, it flooded with water. So we're more than halfway through the pumping of the water. And we've also completed 2 studies, completed all of our metallurgical test drilling programs, updated the MRE, expanding it quite significantly. So that funding really allowed us to move things forward quite a lot. And then last year in March, we had a £57 million fundraise that was anchored by both Vision Blue Resources, but also the UK National Wealth Fund, having put in more than 70% of the raise combined. And that's really allowed us to move things further and accelerate development works, where we currently have a lot of activities, both underground and on surface. And for a project that's pre-FID, we do have a lot going on, and the burn rate is high on the back of continued development. Now, just a couple of slides on tin. And I'd like to point you to the pie chart on the right. Now, if you look at that pie chart, and if you go back, say, about 20 odd years ago, the end uses for tin were literally only what you see on the left side of this pie chart. So mostly industrial uses, alloying, chemicals, tin plating, that sort of thing. In 2005, there was a ban on the use of hazardous materials in electronics. So that meant that lead could no longer be used as solder. And that completely changed the demand dynamics for tin. And now we see that more than 50% of tin demand goes into solder. So it's turned tin from an old school industrial metal to now much more future facing and really essential for modern life, because if there is an electrical connection, you need tin. And now we can see some of the big end uses are in electronics, of course, in renewable energy, automotive in terms of EVs, and we look at that. Oops, for some reason this is not working. Well, it's probably showing the most important stuff. Big part of the globe is missing here. But talking about demand, it's only showing where there is production, so maybe it was intentional. In terms of demand, we're seeing a lot of growth coming from future-facing technologies, whether it be in such as electronics, AI, they're all driving demand growth. But one in particular is renewable energy, where solar is now accounting for about 10% of global tin use. So last year, we saw that solar energy accounted for about just over 8% of global electricity use, up from about 7%, below 7% the year before, 5% the year before that. So we're seeing that growth, and that is helping tin demand. We saw 38,000 tons of tin out of a 380,000 ton market going specifically to this application, where it's essentially a copper wire coated in tin solder that connects the solar cells. So that's a very strong growth driver. Now, when you look at the supply side, well, there you can see the majority of supply, but essentially what isn't shown there on the map that isn't there is where there is no production. So there is no production currently of mined tin anywhere in Europe or North America, yet they are reliant for about 75% of their imports from external countries. The other 25% comes from secondary, so there is some recycling taking place, mainly of electronic waste. In Europe, it's in Belgium by Arubis and another company in Poland, where in Europe we're looking at about 12,000, 13,000 tons from recycling out of 45,000 tons of demand. So huge reliance, a lot of which on not just Latin America, but more so on Asia. And now we're seeing the Western world waking up to the need to secure their supply chains, having seen China for the last 20 plus years actually put everything in place to build their upstream and downstream, in country, out of country. And now we're seeing the Western world waking up to realize that they need to do something about it. So here we're looking at an opportunity for domestic tin production within the UK from South Crofty. And coincidentally, we're looking to produce close to 5,000 tons of tin, which is equivalent to the annual consumption of tin in the UK. Doesn't mean it's going to remain here. We do need to see some more downstream capacity, which is not existent in the country and where power prices somewhat prohibit that. So our plan is to produce a concentrate that will go onto the global markets. I already kind of covered this in terms of the demand drivers, but when you look at the supply-demand chart on the bottom, if you focus on the gap that is created between the demand line and production, that top bit of the production forecast is probable new mines. And I believe this is a very optimistic view of probable mines that are coming online in the next decade. It's essentially saying there's going to be 20 South Crofties coming on in the next decade. And we know that it takes time to get mines into production. And a lot of these mines or these projects have been sitting around for a while and still have ways to go in terms of permitting, social support, as well as just advancing the studies. So let's say in the next few years, we expect, South Crofty in 28, we'd expect another 3 or 4 mines by the end of this decade, but that amounts to about 20,000 tons. So we believe that the price needs to remain high or even go higher than where it is currently to incentivize more production, and it's not going to be overnight either. So markets are tight. The market's been in deficit in 2024 and 25, expected to be in deficit this year again, and we can see that there's an emerging growing deficit in this market. I talked already a lot about the mine itself, its location. You can see it's right down in the western tip of the UK. Now, when most people think about Cornwall, they think about the lovely beaches. So the question I always get is, how could you get a mine up and running in Cornwall? You get a lot of not in my backyard kind of response. That's not the case here. We are nowhere near the coast. Redruth, Camborne area has a very strong history of mining dating back to the Bronze Age, and our mine wasn't operating since 1592. There's a very large desire to see this mine come back into production, not just from just the historical context, but also the need for jobs. We expect to generate about 300 well-paid, skilled direct jobs, another 1,000 jobs indirect jobs from the industry. And we hope that, through our mine and other advanced projects, that we see a rebirth of critical minerals mining within Cornwall as a whole. So we've talked a little bit about the economics in the front slide. We're just pointing out a couple of metrics here, one being EBITDA. We're looking about 120 million pounds of annual EBITDA on spot pricing. That's equivalent to basically our market cap right now. I'll talk a little bit more about the upside potential, but it just goes to show where there's a valuation disconnect currently within the shares. Now, in terms of the mine and the deposit itself, South Crofty has a resource grade of 1.5%. Put that in copper equivalent terms, that's about 5 to 6%. So it's a very high grade deposit, and it's the highest grade deposit that's not currently in production, and the third or fourth highest of those globally, with the highest being in the DRC, similar to what you see in copper as well. And that goes a long way towards supporting the low cost that we expect from this mine. So on this cost curve, we expect South Crofty to come in within the lowest quartile of the cost curve at around $14,000 per ton. So a long way to where current prices are. We don't control pricing, but we can control costs to a certain extent, and that allows us to withstand lower price environments. And that was true when the mine was in production. So in 1985, when the tin price crashed from the mid-teens down to about $3,000 to $5,000 a ton, most hard rock tin mines shut down within a couple of years. South Crofty kept going for another 13 years, up until 1998, which demonstrates that it was a low-cost mine back then, and we expect that to remain the case when we reopen this. Now, looking at the resource, and we currently have about 6 million tons, grading about 1.5% tin. What you see on the cross-section on the lower right of this image, the top part is the polymetallic portion, we call it the copper zone, but it's essentially tin, copper, and zinc. That portion was mined over about 300 years from 1592. And then the lower portion, which is the tin-only zone in the granite, that was mined from 1907. So we call that the modern era of mining for South Crofty. That's what we will be focused on. And what you can see here is where you have mineralization on the upper parts, there's mineralization below. And so this deposit is open in all directions and at depth. And we will pick up mining again in 2028 when we restart, where the old miners left off back in 1998. So they stopped in the faces of the ore at grades, in 2-3% plus. Now, it's good to have some history to talk to as well. This chart shows the cumulative from 1974 up until 1997, the cumulative mined metal in the dark colors, and in the light bars, we can see the cumulative metal added to the resource. Now, this is important because it demonstrates that every year we had a track record of replacing what was mined. So 74, we had a 3.5-year mine life. 24 years later, we had a 4.5-year mine life. And that's true in terms of what we expect now. We're currently talking to a 14-year mine life, yet in 14 years' time, we'll probably talk to you and say we have another 14 to 20 years. This also was done without any drilling. That was at a period, especially from 1985 onwards, where you had depressed prices. They were just really, it was a private company following the veins and just producing and keeping alive. So it's just development, sampling. We have a drill program that we're going to be initiating from later this year that we expect will provide even further additions and conversions to our resource. And that's also supported by an exploration target that we published about a year or so ago that demonstrates that on top of the 6 million tons of resource that we have published, we've identified a near mine target of between 6 and 13 million tons. So we're basically saying there's an opportunity to more than double or triple the resource. And that's just looking at the image on the top right, extensions of the existing resource, not even including other mineralization that we've identified within our mine permit area. And also to mention, this mine permit area is about 1,500 hectares. We have another 15,000 hectares of exploration land within Cornwall, earlier stage, but essentially get started with South Crofty, lots of potential to keep this going for decades, but potential for this to act as a hub and spoke model to bring in more production from elsewhere at a later stage. That also not only means we will increase or extend the mine life, but that will have a very big impact on the production profile. So the profile here, when you look at the line, looks great in the first 5 to 7 years and starts dipping down because that's on the basis of the existing resource. However, when looking at the extension that we'll see there, that will produce a much more consistent production profile in that 4,000 to 6,000 tons per year, going well into 20 plus years. Now, looking at sustainability, social context in terms of having that contract to mine and support, we do quite a lot there. From an environmental perspective, I'll just point on one thing. Looking at the two images on the top, on the left, that's what the Red River looked like before we started dewatering the mine, because the mine water would just overflow directly into the river without any treatment. It's not toxic or anything, it's pH neutral, but there are some metals like manganese, iron, a bit of arsenic in there. 6 months after having started the dewatering process, you can see the impact on the Red River, which we should campaign to rename the Clear River. It is now crystal clear. The water that is pumped out of the water treatment plant is near drinking quality. This obviously is a visible effect that the locals have seen in the river. And strangely enough, some people have mentioned that they have fond memories of swimming in the Red River and coming out kind of stained. So that's a little bit damaging to their memories. On a social context, we do a lot of community engagement. We run annual, we're trying to do more frequent community days. Last one we ran was in November. We had about 80 people show up. There wasn't a single negative comment being made, and all the questions were around, when will this mine start? Can my grandkids get a job at your mine? So there's a lot of support from the community because they see the benefits, especially the economic benefits that this will bring to the local area. Now looking at activities. So like I mentioned, we're pre-FID, but there's a lot going on, mainly thanks to the funding that we got last year from the National Wealth Fund, Vision Blue, and other existing and new investors. The top image shows the pump station about 360 meters down the NCK shaft. That's been completely renovated, refurbished, and commissioned. We're also doing some underground development work at the 25 level. That's about 45 meters below surface. That's an important level because we will be hoisting the ore up to this level. We'll be setting up some ore bins, and from there, the ore will be trucked out through the existing decline to the pre-concentrator plant, which is right next to the exit of the decline. The reason for that is, historically, the mine hoisted up to surface, but now, given that there's more residential areas surrounding the mine, it's more for noise suppression. So we will be doing the handling underground. So there you see an image from, I think that image was taken a month or so ago, of the dual development works that are taking place on that level and advancing. Now, what's quite important is we have brought forward this development by about a year. And the reason for that is to start training up our new recruits. So we currently have about 12 new recruits that have come in. We have professional trainers as well as some of our existing guys who have a lot of experience who are training these guys up. So they train up over here, given them a little bit more time. This is not on the critical path. And then they'll be suited to go down underground to deeper levels for that development once we've picked up the pace of development. But that's demonstrating that while Cornwall, Camborne, Redruth have had a strong background of mining, there's been a bit of a lost generation here of miners because there's been no mining since 1998. Camborne School of Mines still produces very strong geologists and mining engineers, but over the last 20 odd years, they've been picking up and leaving to Australia, Latin America, or South Africa. We're fortunate that we're able to attract some of these guys back who have their history and roots here in Cornwall, but at the same time, for the younger crowd, we do need to train them up. And we do have partnerships with Cornwall College and the Camborne School of Mines to help us through this as well. On surface, quite a lot of activity as well. Top right, that shows the excavation works that are taking place for where the pre-concentrator plant will sit. That should be completed in Q3. We've also actually commenced the excavation work of the concentrator plant, so this image is a little bit stale at this point. Image on the middle, that's a winder house building for the Roskier shaft, which is about 800 meters away from the main shaft that you see here. Significance of that shaft is that it will be utilized for ventilation as well as for secondary egress. So we're accelerating development there. And as we gain access to a level about 530 meters below surface, we'll start that development that will then connect to the Rossgear shaft. On the bottom right, that's the new workshop and stores building. That should be completed later this month. The importance of this building is that we received a grant of about £4.2 million from Cornwall Council as part of the Shared Prosperity Fund to build this. So that's about 2/3 of the overall capital required for this building. That demonstrates that not only do we have UK government support through the UK National Wealth Fund equity ownership in the company, but we also have a lot of support locally with the council having given us that grant. And we'll continue to work with the council for any additional grants that we can get with a newly formed Kurnow Industrial Growth Fund that they have in place. So all that is to take us towards first production in the middle of 2028. As you can see right now, Q2, Q3, a lot of activities taking place. However, a lot more of the underground development and actual construction work will take place from later this year, beginning of next year. That, of course, will need further funding. We are very well advanced with our project financing. Total capital is about £200 million. We'll need a little bit in excess of that to cover corporate costs, financing fees, and other. But we've engaged Endeavour Financial last year, actually the year before, who are advancing the senior debt process. We'd hope to be in a position to announce something pretty soon, and leading after that to close the full project financing with the view to announce final investment decision at some point this summer. I like to show this chart as one of the final slides, just looking at comparing where our current market capitalization is, actually slightly lower, unfortunately, today than when we sent this slide through, and what the annual earnings and cash flow generation is expected to be. So on EBITDA, we're looking at 120 on spot, if not more, so it's equivalent to our market cap here or there. However, if we look at this mine with a longer-term production profile, that NPV of 450 more than doubles. And then looking at this on a multiples basis, which we believe once we are in production and we demonstrate our ability to replace and expand the resource, we should look at this, taking that 120, putting it on a peer multiple of a critical minerals Western world producer, let's say 6 times. And that's where the kind of valuation we believe we should be moving towards as we remove financing risk and remove execution risk over the next couple of years. So in closing, I know I've probably run over my time. I won't run through all of these, but what we see here is the opportunity to restart tin mining in a historical district in the UK. We have strong support from pretty much all of our stakeholders, and this is the opportunity to bring tin mining back to the UK, and this is a commodity that we believe is heavily underlooked and undercovered by the banks and other consultants, but that is essential for modern life, and here's an opportunity to bring that to the Western world from our mine.
Thank you very much.